It is so good to be together. Thank you so much for sharing this is January, your Wednesday, January 29th, 2025 with me. I appreciate you. We are starting right at the top of the hour like we should be. What a wonderful January that we have had, 2025. And this topic, uh, and it's rare that I get an opportunity to actually talk about something that I never, talked to you about before. So we're going to talk about black swans. Black swans. Yes, 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 there is such a thing. Black swans are there is such a thing, and I'm gonna start off the top with just the definition of how a black swan is actually used in the financial markets, how we consider it, how we think about it. So if we refer to, and I love that we have like different little sayings, in my business. We have black swan, we have the gray swan, because generally when you think about a swan, it's a white swan. So there are actually black swans out there, and a black swan, when we use it for our financial analysis, it is an unpredictable event. A black swan, an unpredictable event that is beyond what is normally expected. Like so if something happens and it's not what we expected to happen in the market in that particular industry for that particular country, then and it has potentially severe consequences. So specifically, to the market, when something has, like, there might be a particular company and something happens and it impacts that industry. Like this week, we're contemplating, is this new AI information a black swan for the AI industry and all that's going on in AI? Like, do you have China saying that they can, they have created an artificial intelligence platform and they created it very cheaply. So it's, just it's to me, yes, it already hits the definition of a black swan. It is going to change things. Now, does it have to be potentially devastating? Of course not. Of course not. It doesn't, have to be, but my thing is that when we are investing in stocks, and the portion of my client portfolios that we have in stocks, it's for the long term. More importantly, I say that what we have exposed to risk and volatility, I have to make sure that you have a great understanding of what could happen. Because the closer you get to the point where it's like, hey, I want to use this money, it becomes more and more important that you be talking with preferably a registered investment advisor. And I am JB Bryan, President and Chief Investment Officer of JB Bryan Financial Group, a registered investment advisory firm that I established by the grace of God in 1995, March 1995. Yes, indeed. Don't count the years. Don't count the years. And this is the home of Afro economics. Make sure that you have the book. My love. Oh, my goodness. No, Afro economics is the most positive black swan. It has totally changed the growth of wealth in the black community. They did studies that said that, we were on the road to zero wealth. But my goal, mission, and commitment is that that does not happen. That does not happen. The I don't know if you've ever read that study, The Road to Zero Wealth, but definitely LinkedIn user has a comment. Can you speak on the data behind that claim, as there has been no financial data to back up this claim? There is also data behind those claims being false. I wonder if they're talking to me or it's just a computer. It just says LinkedIn user. You would have to actually call my office and provide additional details on the data that you're referring to. The But interesting enough, they might be saying that there is no China AI. No, that's possible too. The we just have to, as um investors, keep an eye on it. One thing that we are promised is that they will continuously be AI. There will be not AI, but there will be black swans. There will be things that we cannot anticipate. There will be things that come out of nowhere. Since 1928, there has repeatedly been dips in the market throughout even the a 1 year period. Not, I can even, like, let me I'm gonna pull up the data here, and it says over a 1 year period since 1928, seven times on average, 7.2 times a year, there is at least a 3% dip in the S&P 500. And then over a additional over a 3 point now over 3.4 times per year, there is a 5%, which is considered a mild correction. You can anticipate that on average, 3.4 times. So at least 3 times a year on average since 1928. The S&P 500, the 500 largest companies in the US in market value. So, and then have that type of volatility. So it's one thing, seven times a year on average, a 3% dip, you know, and then 3.4 times a year, a 5%, and then at least once a year since 1928, a 10% what is considered a correction. Mhm. And every 2 years on average, 15%. 15% drops every 2 years, and every 3.5 years, a 20%. So just 20% drop is considered a bear market. And it says since 1928, that has happened every 3.5 years on average. So, one thing that we can depend on is that we're going to have some volatility. Now, so I wanted to make sure that I discussed today just about that, the what black swans are and unpredictable events, so that when we're hearing these terms, that we are very familiar with it. But a black swan is not just like what would cause this, we get out and they say interest rates are going up and then the market responds and this and this and that. That's not a black swan. Generally, when they say interest rates were increased, we already anticipated that interest rates were going to increase. That's not. The black swan has to be something extremely rare, and that has potentially severe consequences. It can't be predicted beforehand. Black swan events can cause like catastrophic damage to an economy. No, one example that I was looking at was like in Zimbabwe, they had like inflation that was so high that they didn't anticipate at all. And their high inflation ended up being a black swan for them, and like really rocked their economy big time. I was like, why? Like, wonder. why I was like, why is that used, in the books as an example? And it was just that it's used as Zimbabwe is used as a textbook example of why inflation has to be controlled, why a country, and a company as well have to keep their expenses under control. But a country would have to, or a nation has to have a monetary policy that will make sure they will do its best to keep inflation under control. No, so the um, somewhat it is argued that one of the biggest black swans for the U.S. was the housing market crash in 2008. Isn't that something? No, and the which was interesting because this book came out in 2007 called The Black Swan, which said that um, this is what a black swan is. And then when we had the housing crisis in 2008, it checked all of the boxes for it. It was impossible to calculate what was going to happen. The um, it, it had serious economic consequences, and so it that we could use as in the US as 2008, and that was quite a time. Mind you, I was in business there. The technology bubble, I don't know if you remember that, in 2001 was is considered another black swan event. According to the books, it says America was enjoying rapid economic growth and increases in private wealth before the economy catastrophically collapsed. As we're talking about 2001, the internet was at its infancy in terms of commercial use. Not something. 2001. Almost I cannot remember a time without the internet, and it's like such a part of our lives now. Like then, and then they had all these companies that folded. Funds that were holding them were hit hard. Mm. All those risks impacted investors, and I can say, that I even then was very committed to the please thank you for watching, and please subscribe and share this video with your friends. Let's all be empowered together. I can honestly say that even in 2001, even in 9/11, that I've had so many clients and members of Afro Economics who have said that it was so important to have you on my team at that time. No, that having a financial advisor, someone to talk to, someone to go through, and then most importantly, no, my commitment to understanding your risk analysis. Can you handle volatility? Are you comfortable with volatility? Because we have so many investment options that you don't have to be exposed to this market volatility. It's a choice. You don't have to be. There's other ways for us to build your money, there's other ways for us to secure your retirement. There are options. My job is to just show you all of your options. And most importantly, my job is to get a better, keen understanding of you. I want to understand you. I want to understand your mindset, and a lot of times I can see the mindset better than you can. And sometimes, that's difficult, to communicate that, I promise you, I'm looking out for your best interest, even though sometimes the investor is saying, I want all the risk in the world. But when I do the algorithm, the numbers don't say that you can handle that. Interesting, right? There we go. So my go to my notes. My expectation is that stock prices will just continue to adjust with this China AI story as it unfolds. So we have to do our best. I am doing my best to, learn more, prepare for what I anticipate is going to be a bumpy road for people who are exposed in that area. In the no, and I do focus my portfolios on a lot of growth. So this is really important to me. Like this is gonna be really interesting, and there are some pros and some cons about this. And so there's also at this time there's a lot of companies that are reporting their earnings from December, from that last fourth quarter. They're going to be coming out in the next couple of days. So we're going to continue to see some volatility if they miss the mark on their earnings. But the that I think that it is important right now to make sure that you talk to me about your portfolio. I'm doing a lot of meetings just going over people who have portfolios at other firms and helping them get a better understanding of what they're getting there, and then getting an understanding of what they want so that we can have some better performance moving forward, right? And it has to be, we have to make sure it's most appropriate, appropriate for you. So I want to also mention, if you are the if you are, I want to make sure, if you are a federal employee, don't be alarmed and don't feel alone. Now, this is like one of the best times to have the Afro Economics membership, because you and I are able to sit down and talk about if you should take this offer from the Trump administration. Is it time for you to leave, or is it not time for you to leave? And I don't know if you all have heard about it, but the Trump administration has offered everyone that works for the federal government, almost everyone, there are some people they haven't offered it to, that they can leave and get paid through September. So it could be a good opportunity for some people. For some of you, it may not be your time. Some of you, it might be a black swan. I saw that, like, I've seen that throughout my career. Sometimes people take offers and then it financially destroys them for the rest of their life because they're not in a position to actually leave yet. They're not ready. No, and unfortunately, that's gonna be a lot of the people. They're gonna be like, "I'm gonna take this. I don't want to go back into that office. I'm gonna take this," but then they don't realize that that's all they've ever done over the last 15 years or something. And can you get another job that's going to pay that? Because we still need to build for your future. No, what would your pension be? How long would you have to wait for that? These are all the questions that we need to go over together so that you don't feel like I'm crazy. I should have taken that offer. You know what I mean? No, some people, it's in their best interest. Believe me, wise people are getting on their financial advisor's calendar as quickly as possible to get help. Don't be guilty of signing paperwork. And I've saw so many people when they had like the Spurs program and the SIRS program switched to FERS. And there's so many people that ask me questions after they filled out the paperwork. That's how far I go back. Like, think, I've been doing this over 30 years. I started my firm 30 years ago. Before that, I was a financial advisor. So I have been seeing us do the wrong thing. And then want me to help you be able to get it better. And we gotta get it. We gotta do it first. We gotta avoid it. We gotta avoid it. The key is to figure out a formula of how we can avoid black swans. And then when they do come around, that you can make it, work, because you got to remember, you can look at this like, oh, this is a great opportunity. This is the best thing that could have ever happened to me. And then I did everything I could to turn that ringer off in the office, right? In the studio. All right. It's a ringer off. And so much for that, because that is ringer on. But we have to make sure that we don't get confused with this is a great opportunity and get great opportunity confused with it's a black swan. This is something that came around and it could be financially devastating. And then if we do have a black swan, how's the best way to rebuild? How's the best way to recover from that? You know, get financial advice. I don't do this part-time. This is whole time. This is all the time. Y'all know that. This is what I do. I'm here to help. So let's continue to, keep our keep keep our brains on. Let's keep our brains on. It's mind over matter. Mind over matter. Stay strong, stay intelligent, stay on it, stay organized, be mindful. There's absolutely no room for nonsense in this world that we live in now. There is no room for, oh, I just felt like doing that. No, everything now we have to be strategic. We are in a position, you're blessed to be in a strategic position. You're blessed to have access to resources. I have lots of information that I'm able to help clients. I have lots of experience. So, no excuses, which is what the title of my complimentary membership is. No excuses. So, go to afroeconomics.com or jbbryan.com. Get empowered. So, we talked about, the current volatility in the stock market. I anticipate that it will continue, that over the short term. And I can anticipate that because that's what statistically it has shown me that it's going to do. So stock investors have to be appropriately placed in this here stock market. Are you getting the help that you need? Do you understand what you're doing? Are you taking your money seriously? Have you set up your allocation correctly? Are you getting the help that you need? Right. So, we definitely need to continue to. I'm glad that you logged in. I could be preaching to the choir. I'm glad that you logged in. You're at the right place. You can back if you're just coming in and watching this. Please start from the beginning. I'm committed to doing this at least once a week, and we have our private members only meetings on Friday mornings at 9 a.m. and sometimes on Saturdays. Saturdays are a good day as well. Don't hesitate to ask me any questions. My email is jb@jbbryan.com. And I have it. My phone number. My phone number is 1-844-522-7926. Let me see where I have the where jb@jbbryan.com is up. Here's an email. And we have that recorded as well on there. In closing, I hope that that's a good market update. And any federal employees that have any questions, don't hesitate to reach out. I'm JB Bryan, President and Chief Investment Officer of JB Bryan Financial Group, a registered investment advisory firm and the home of Afro Economics. Thank you in advance for the opportunity to serve you. I appreciate you.